Yes, good morning. We are back on tutorials again. Accounting. Remember, we were looking at the form of business entities, and we are done with that. Let's have a look at the nature, the principle, and the scope of financial reporting. We are going to go slowly, and as I said, this is for the basics. For the juniors, financial accounting and management accounting, they are not the same. They are different. Financial accounting is we call it F3, and financial management is F2. They are separate long course of their own, but here we are just going to look at the summary. You may have a wide understanding of what accounting and financial reporting is about. So your job may be now is to focus on one area, that's the type of accounting, but you may understand the breadth of work which an accountant undertakes. So it means you need to learn all of them. We need to, because in one way or another, you'll have to apply it. You never know the kind of job you're going to get. Maybe the job that will require you to have an in-depth knowledge of financial accounting or an in-depth knowledge of management accounting. What is financial accounting? What does it entails, and how does it differ from management accounting? So far we have dealt with financial account. Financial accounting is mainly a method of reporting financial performance and financial positions of the business. It is not primarily concerned with providing information towards the more efficient running of the business. Although financial accounts are of interest to management, their principal function is to satisfy the information need or passion, not involved in running the business. They provide historical information. Keywords there in historical information. Another keywords, they want to provide efficient information, the information that satisfies somebody who is not involved in the business. Somebody who is not involved in business. It is not primarily concerned with providing information toward more efficient running of the business. Efficient running of the business, that's management in nature. That is management accounting. Here, we are going to provide information, financial historical information, so that somebody who is not in business will know how business is being run. It is recording, analyzing, summarizing financial data in the best form possible. That is financial accounting. Let's go and look at the management accounting. The information needs of management go far beyond other account users. Mark that. Managers have responsibility of planning. Remember, planning is part of management. Having planned, you need to controlling. What do you control? You control the resources of the business. Planning and control, those are management words. Therefore, they need much more detailed information. They also need to plan for the future. Planning of future involves budgeting, which predicts the future revenues and expenditures. So management, or sometimes people call it cost accounting, is a management information system which analyzes data to provide information as a basis for managerial action. The concern of the management accountant is to present accounting information in a form most useful to the management. So this would now brings me to make a clear distinction between management accounting and financial accounting. So management accounting or accountants, the main aim is to gather information, gather data, and provide to the management so that the management can use it for their planning, can use it for controlling resources, can use it to control the expenditures and better the future trend of the business. While financial accounting give historical data, historical financial information data to the user. So it tends to be like more of a past event kind of thing. Meanwhile, management accounting, it is more of the future, more of the future, because when it talks about planning, seeing a way of controlling expenditures, controlling resources, it is more of a future sort of thing. So we need to, for the moment, this is just the broad summary. But we can go into detail, but not now, at the moment. You also need to understand this distinction between management accounting and financial accounting. The principle of financial reporting, I think we are going to deal with it in chapter 3. So let's continue. Let's go and look at the main users and the stakeholders. When we talk of the users, because we said these two types of accounting, they are just not prepared for nothing. They are prepared to target some users. Why are those users? Because these are the people who would help in running or participating in business decision making in one way or another. Here we talk about financial accounting, the need for financial statement. I say financial accounting give historical data. Historical data about what? Financial positions of the business, statement of profit and loss, sometimes we call it comprehensive income statement, cash flow, statement of changes in equity, ratio analysis. These are things that embodied financial accounting. So when we now say there are various groups of people who need information about activities of the business. Who are those people there? Why do business need to produce financial statement? If the business is being run efficiently, why should it have to go through all the bother of accounting procedures in order to produce financial information? International Accounting Standard IASB states in its document Conceptual Framework for Financial Reporting. The objectives of financial statement is to provide information about financial positions, provide performance and changes in financial positions of an entity that is used for a wide range of users in making economic decisions. As I said, when we talk of financial positions, ordinarily somebody can call it that is balance sheet. We used to call it balance sheet. Performance of changes in financial positions. Statement of comprehensive income, where it includes sales, the cost of sale, good available for sale, gross profit, then now additional miscellaneous income. We tax away the expenditures, profit before interest and tax, profit after tax, we get profit. Then we now tax that profit. Now it become part of computing the statement of financial position as of that date, and we proceed from there. So now the issue here is we are looking at who are the guys who are interested in this information and why. In other words, a business should produce information about the activities because there are various groups of people who want or need to know that information. This sounds rather vague to make it clearer. We will study the classes of people who need information about the business. We need also to think about that information in particular is of interest to the members of each classes. Large businesses are of interest to a greater variety of people, and we consider the case of a large public company whose shares can be purchased and sold on a stock exchange. Now, as we are talking, we are saying the kind of information which is needed will depend on the nature of the business. If the business is a big business, say like MTN Company Limited, there are quite good numbers of people or section of classes of users who are interested to get information about that. You can be as a customer, you can be as maybe the government and the rest of it. Let's go and look at them. That is 4.2, the users of financial statement and accounting information. So the following are likely to be interested in financial information about the large company with shares that are listed on stock market. That's very interesting. Those are the investors who would like to come and join. Remember, we have types of shares. We shall deal with that as time comes. The managers of the company are appointed by the company owners to supervise the day-to-day running of the business. We know that. They need information about the company financial situation as it is currently and it is expected to be in the future. This enables them to manage the business efficiently and to make effective control. That is the justification why managers need this information. They need this information because they're involved in running the business on day-to-day basis. So it helps them for effective decision making. Shareholders of the companies, the company owners want to assess how well it is management is performing. They want to know how profitable the company operations are and how much profit they can afford to withdraw for the business. There are many intentions because the shareholders, these are the owners of the business, whether ordinary, preference shares, they want to, their intention, they don't want to invest their money into an entity which does not provide profit. And for them to know whether the business is performing well or not, financial accounting need to be prepared. Statement of profit and loss. Trade contacts include suppliers who provide goods to the company or creditors or customers who purchase the good provided by the company. Suppliers want to know about company ability to pay its debt. Customers need to know the company is a secured source of supply and is no longer in danger of having to close down. When we talk of trade, here we have two. We have the trade receivable. These are the customers, and a trade payable. And a trade receivable, they are informal customers. Customers who wants to buy a good and they go and sell. They want to know whether this company may not close down. There's continuity. Remember the concept of the going concern concept. And the suppliers also wants to know whether their money will be paid. So we have the second group then, and the next group is a provider of finances to the company. There's a bank. Of course, any entity must be financed. Banks give loan. And once they give loan, they want to know how the business is doing, whether their loans will be paid. This includes the bank, which allows company to operate an overdraft or provide longer term financial for granting. The bank wants to ensure that the company is able to keep up interest payment and eventually to repay the amount. That's very clear. Taxation, that's part of the government. Want to know about business profit in order to assess the tax payable by the company. Employee of the company have the right for information about the company financial situation, whether their future career and the size of their wages and salary depends on it. Financial analysis and advisor need information for their clients or business. For example, stockbrokers need information to advise investors. Credit agencies want information to advise the potential suppliers of goods to the company. Journalists need information for their reading public. Government and their agency are interested in allocation resources and therefore in activities and business entity. They also require information in order to provide the basis for the national statistics. Then we have the public. We have the public who would also be very interested. The entities affects the members of the public in a variety of ways. For example, they may make a substantial contribution to the local economy to provide employment and using local suppliers. Another important factor is the effect of the entity on the environment, for example, as regard pollution. Accounting information is summarized in financial statement to satisfy the information need of those different groups. Not all will be equally satisfied. That's a strong statement. So this is the users and the stakeholders and why they need those information. So we have handled the differences between financial accounting and management accounting, and we said financial accounting basically emphasize, gives information on historical data, that's the performance of the business, and they prepare the balance sheet, that's a statement of the financial position of the business. They prepare profit and loss, statement of the comprehensive income. They prepare changes in equity. They prepare cash flows, and they prepare the ratio analysis. So this forms what's known as financial accounting. While management accounting is concerned with planning for the future and ensuring that losses doesn't come, controlling, budgeting, projecting the future. They provide information for the management so that the management make effective decision for running of the business. But the whole ultimate aim is to ensure that business is ran in such a way that it produces profit or meets its objectives. And we came and look at down the users of financial accounting, why they need it, why they need it. Because these are all the participants. We call them stakeholders. We look at the managers that are interested. We look at the shareholders that are interested. the trade contacts that are interested, finance providers or finance the company that are interested, taxation authority are interested, employees of the company, financial analysts and advisors, the government and their agencies, then the public. So this is the lesson for today. I wish you well. Keep checking on us. Thank you so much. Great day.